Ladies and gentlemen, please welcome Holly Hughes, Chief Marketing Officer of BAI.
Thank you. Good afternoon, everyone. Welcome to our final presentation for the thought leadership this afternoon. We're so glad to have you. I know it's very nice outside, but we do appreciate you coming in. A really great topic today around faster payments. And we've got a perspective from Deloitte. We've got an awesome panel of folks who will talk about, we all know that a number of countries have made some great progress in that area, really enhancing the efficiency and the speed of the payments. And we are headed that way in the United States, but there's certainly a lot of questions out there for both financial services, organizations, as well as consumers. So we're very excited to have a number of gentlemen here from Deloitte who are really going to take us through the issues and provide a perspective that I think will be really helpful as you go about and start to make your own smart business decisions in this area. So I would love to welcome the Deloitte team on stage, led by our moderator, who is Chris Allen.
Thank you.
Thanks, Chris. Yep.
All right. Thanks, everybody. Welcome. If you all want to kind of move up, we can be a lot more intimate. It's a little dark out there. But thanks, everybody. Appreciate it, and welcome to our panel. We think we have a great panel discussion for you today. My name is Chris Allen. I'm a senior manager in our payments practice, and I do quite a bit of work in and around payments and doing work in faster payments as well. We're going to be as interactive as possible. So as you see on the bottom of the slide, we're going to do some polling here. So if you can all get your mobile phones ready. And to help us out, if you can register once by texting Deloitte BAI to 22333, that'll register your phone, and then as we do the Poll Anywhere questions, which you'll see coming up very quickly, you can give us your answers. And we'll use this to be very interactive and hopefully drive further discussion. So without further ado, I'd like to introduce my esteemed panel. I'm here to help moderate and keep them in line, because they can be a little bit of a rowdy bunch, but we'll do our best. So, Brian?
Brian Schneiderman. I lead Deloitte's payments practice in the US and globally. We have a practice in about 50 countries right now, people physically on the ground. So look forward to bringing some of those insights to you.
My name is Tushar Puranik. I'm a director in our banking and payments practice. Over the last 20 years, I've actually been involved in building significant number of mission-critical real-time payment systems. And these days, I focus a lot more on helping our clients deal with large-scale transformational initiatives in payments. So Brian and I work closely together as a part of the global payments practice.
Good afternoon, everyone. It's a pretty packed audience here. Thank you. My name is Prakash Santana, no relation to Carlos. I lead payments risk and integrity practice for the payments practice, work with Brian. Been with Deloitte for about 4 years. Previously used to manage fraud at MasterCard globally. Been in the payments industry managing fraud for about 23 years. So happy to be here. We work, as I said, as Tushar said, we work globally on all payments initiatives, including mobile and the blockchain. So.
All right. So we're going to get going with our panel discussion. We're going to do a series of questions which our panelists here are going to answer. So the first question is faster payments a wave? What's happening around the world, and why should we care? So I think Brian Schneiderman will take our first question today.
So in thinking about this, and I have to decide what is a wave versus a swell. I mean, certainly in the 14 countries where they have a live system up and running and quite a lot of volume, it's a wave. So in the UK and in Japan and India. When I think about the US and the others, so there's about 25 others that are working on it now. It is certainly a swell, but it is a swell that's going to quickly turn into a wave. At Deloitte, our analysis in working with our clients is that we're about 18 to 24 months off. I know in one of the earlier sessions they were talking about the timing. I think we will certainly see solutions start to become in the US live here in the next 18 months, and then we'll start to see the scale up. I think we believe the scale up is going to be a little quicker because of some of the things that I think we're going to touch upon today. But in terms of the height of the swell, in the UK, it's, for those of you that don't know, $90 billion worth of transaction value in 1 month in November. So that's pretty significant. If you look at the top 25 countries that we're talking about that are moving this direction, that represents about 89% of all non-cash payment value. So that's a pretty big swell, and I think certainly within the next 18 months it's going to be a wave. The other thing is merchants. There's not enough talk about what the suppliers and the merchants are doing to prepare, and whether they foretell a wave or just a swell. We are doing a lot of work with the merchants, and they're starting to develop not only use cases, which we have over 100 use cases that we've cataloged, but lots of new products and services that they're planning on releasing, many of them to generate new revenue. So I think that foretells a pretty big wave to come here in the US, and certainly globally, there's already waves.
Tushar? Prakash,
Yep.
anything to add?
Yeah, I think the only thing I would add is, in my mind, this is a customer imperative, and we would be sitting maybe 3, 4, 5 years down the line, and I would say, if you are a market player in the payment space, the Faster Payments Initiative would have touched you in some form or fashion, no matter what. Now, I'm a technology guy, not a terminology guy, so I don't know if it's a wave or a swell or whatever, but it will impact you.
Yeah, so from my point of view, we've already seen a version of faster payments implemented here in the US and globally. That's the Bitcoin blockchain. Yes, it's not scalable to the extent that payments industry is, but we've already seen a taste of it. And we are only going towards in that direction as more merchants are increasingly wanting to adopt some form of faster payments, whether it's Bitcoin or some other cryptocurrency. And the consumers are also seeing a need for a quick, instant, real-time transfer with lower fees. So we're technically moving in that direction.
Okay. So we're going to do our poll question. Our first poll question is, do you see faster payments in the US as a positive change, negative change, just hype, or you're not sure? So you first need to register your phone by texting Deloitte BAI to 22333. And then once you do that, text A, B, C, or D, your answer, to 22333. So we've got some coming in, and we want everybody to be interactive here. So please pull out your phones and help us out. Give everybody a minute to do this. So far, all of a positive change.
Yep, when we usually do this, we get a lot more hype, people thinking that it's hype. Oh,
Somebody's not sure? All right. Yeah, when we do this, we had a similar discussion with our partners and directors at Deloitte, and not all were as positive as you all are. So that's interesting. But good news. So I think for the most part, we're seeing it as a positive change. Again, for those who want to participate, first enact your phone by doing Deloitte BAI to 22333, and then you can text your answer. But it looks like overwhelmingly folks think that this is a positive change for the US. So I think that's good, and that'll hopefully help drive the discussion and the continued work to build out faster payments here in the US. Any other thoughts before we move on? All right. So next, we're going to do another poll question just because we can and because we want to set up the next discussion topic, which is how do you find a fast payment? In terms of defining that, from the time you actually request approval for a payment to the time good funds are available to the person who's receiving it or entity who is receiving it, how would you define fast? So near real time, under 5 seconds, under a minute, under 15 minutes, 30 minutes, under 24 hours. We wanted to get a sense from how we think about in terms of what faster payments actually means to you all. Under a minute, excellent. Near real time. Interestingly, if you have seen the U.S. Faster Payments Task Force effectiveness criteria, which was released just a couple of weeks ago, it suggests that from approval through to availability of good funds should be under a minute, and that's pretty much where we're at today. So, so good work, everybody, on using the poll everywhere. We're going to continue to do that.
Yeah,
so now,
I have a comment here.
Oh,
so I don't know if you know how long it takes a Bitcoin transaction to be confirmed. Anybody? Show of hands? Okay. It takes 12 minutes, up to 6 transactions to confirm a Bitcoin transaction. So so there's an interesting part about the Bitcoin blockchain, which is technically a faster payment, because now here the settlement is confirmed in 12 minutes. So settlement of transaction is confirmed. So here we're talking about authorization, or the way it's implemented in the UK, authorization and clearing and settlement of funds for the payee within under a minute. But for the entity holding the bank account, it's net deferred settlement, maybe multiple times a day. So there's a big difference in the way we're thinking about faster payment implementation. The payee gets the settlement done fairly quickly, under 5 seconds or under a minute. But the entity holding the account, if you're a financial institution, you have the exposure until the settlement's done. So just a comment there.
all right. So our next question is, how do we define faster payments? How fast is faster? So, Tushar?
Yeah, I know there's a lot of conversation on this topic, and somehow we try to bucket solutions and systems into thou shalt be fast by being less than 5 seconds or whatever it is. I think the reality of this question is you're going to be as fast as your customers want you to be. You know, the analogy I use is that of you're building a national level ecosystem which is going to look and feel very much similar to the national highway infrastructure. And even though you may put speed limits and you may put standards around how fast you can drive around this highway, ultimately how fast people drive on it will depend on how soon they need to get to from one place to another. And that's why I think there are customers out there, they're corporate customers, they're individual customers, and they have use cases which need to be guaranteed funds available within less than 5 seconds. And there are customers out there who need to do the same thing in 15 minutes, and there are customers out there who can do this in multiple times a day, and that's good enough for them. So I do think that when you look at the different use cases that the faster payments ecosystem is going to enable, it is really important to think about which speed category do they fit into, and that's one of the things that we're doing as we look at the faster payments area. We started to identify about close to more than 100 use cases, and start to group them into speed buckets of these use cases would typically fit into these kind of speed categories. And we believe that that's important. I think as Prakash was saying, if you look at the speed in faster payments, there are 2 elements of it. One is, what is the customer experience, as in how soon does the customer get guaranteed irrevocable funds? And that, as I said, depending on the use case, could be different. And the second part of the ecosystem is the intermediaries or the banks who are basically passing GL entries between each other. How soon do they do that? And that's a completely different timeline. And that could be, and if you look at the solutions globally, there are solutions that, from a customer experience perspective, do this in sub-second or less than 5 seconds or maybe a few minutes. But then when you talk about the settlement, I think as Prakash was alluding to it, there are multiple solutions out there which could be either continuous net settlement or gross, real-time gross settlement, or you could do a deferred net settlement. You could do it, 3 or 4 times a day. And those are the different models that we think that will come about. I think what US would do, I think it's wait and watch. But those are the different models that are out there. Short answer, I think, is fast depends on who you ask and depends on what the customer need is. And I think the ecosystem itself will need to be really ready for, well, if I need to do it sub-second or 2 or 3 seconds, that's where some of the greater technology challenges are. That's the common denominator that will drive some of the ecosystem build out.
So look, I don't think we talk about or think about this enough in the eyes from the lens of the customers. And I want to talk about the suppliers, thinking about how merchants will use this. Some of the new innovations that we're seeing from our clients at Deloitte develop. There are some very specific groupings or categories that we could start thinking about. Time-sensitive products and services lend themselves very well. So a lot of those 100 or more use cases that we're talking about and those new products and services align with, the actual service or product has a very, very short time frame. It's very quick. There are a lot of, opportunities to use faster payments. COD, cash on delivery, that whole concept, except get rid of the cash, right? Dan Gonzalez from the Fed actually had a nice piece that he was quoted in the American Banker talking about a line of trucks loading and unloading gravel, waiting for the okay over the radio to dump or pick up the gravel and ensure payment before they actually did that, and there were lines of trucks down the street, and that's a real example. There are situations where prices are fluctuating very, very rapidly, and when you make the sale, when the transaction happens, it's important that there be real-time and very, very fast payment. There are consumer behaviors. I think one of the most fascinating ones that we're working on with some of our clients at Deloitte is around impulse spend. We all in payments know how powerful and important impulse spend is. Well, there's new products and services that the merchants are developing which they can only price and competitively if, and these are like micropayments, if they are irrevocable real-time payments. And we could talk about some of those when we get to use cases.
Great. So we've talked a lot about faster, what that means. Now we'd like to talk a little bit about what solution models are being deployed globally. So Tushar, would you like to talk about that for a bit?
Yeah, I think when we talk about solution models, it kind of depends on various aspects of models that get to define what those models are. So you could do that on the basis of what the ownership is, what are the different types of solutions, what's the role of government in actually building these solutions, what kind of standards have these solutions embraced, and so on and so forth. In my mind, though, especially as we look at the US model and where the US model is headed, I think what's really important is to think about what does the actual physical solution look like, and what is it really fundamentally based on. And if you look at sort of globally some of the implementations that have happened, I think there are probably 4 different categories that we could put. I would actually say 3. The 4th one is, jury's out there on that one. One of them is essentially using your legacy infrastructures that already exist to build faster payments. So this is where you're either using RTGS or, interbank kind of capabilities that you already have to build faster payment capabilities. The second would be where you build brand new infrastructures for faster payments. The third scenario, as Prakash was talking about, is blockchain a reality? Are you going to build your faster payment service on a blockchain-based infrastructure? And there are examples of each one of these types. If you look at Japan's Zengen, for example, it was set up in 1972, and then when they started to modernize Zengen, we are now at the 6th generation of Zengen in Japan. The UK's faster payment service was a brand new infrastructure that they set up. Blockchain, I guess, it's still out there. There's no real national level implementation of blockchain, but that, I guess, merits some kind of discussion. But then I think the 4th model is really a sort of a hybrid model, right? Where if you look at US today, if you look at some of the legacy networks, you have Clearinghouse, for example, that's already talking about doing real-time ACH. The second option is, what do the credit and debit networks? They are already fairly present. A lot of banks are already connected to them, and those networks already exist. And maybe even in the US, we can think about a brand new ecosystem that can come across. And basically, the hybrid model is where you would have 3 oligopolistic or 3 or 4 or multiple oligopolistic systems that come and coexist. And when I say oligopolistic, I really mean that no single network or no single solution dominates the overall payment space, right? But they do interoperate and collaborate in a way that the standards enable them for them to interact with each other. And that's potentially a real option for something like the US model.
Yeah, I think the hybrid model has a lot of merit here in the US. I think anytime you have the kind of fragmentation we have, right? So we've got 5,000 banks. In some countries, they might have 5 or a couple hundred banks. But I think the fragmentation lends itself to a hybrid model, also a lot of fit-for-purpose models that can coexist. So I agree with Tushar.
All right. So Prakash, we've talked a lot about speed. We've talked about immediacy of payments. Is faster going to be secure?
Okay, great question. So as a fraud person, fraud prevention person,
As a fraudster.
Beware of Prakash, guys.
yeah. So this is interesting if you look at it from this perspective, right? So faster payments predominantly is going to be online, mobile, and we still haven't discussed point of sale. And it's potentially will apply to B2B, B2C, C2C, or account-to-account transfer. So if you look at the faster payment, the way it works, authorization is real time, clearing and settlement to the payee is real time, but not to the institution. And it's guaranteed. So let's look at a person-to-merchant transaction, right? Today, online world, if there's fraud, the liability shifts to the merchant. All that liability is now going to shift to the institution, potentially, right? Because it's guaranteed payment, and it's immediate settlement, and the bank will have to settle within a few hours, assuming it's same-day ACH or some other 3 times a day or 4 times a day, whatever it is, the liability now shifts to the bank. So the question is, what types of fraud prevention capabilities do we need to prevent fraud? So in my opinion, there are 2 layers of security you need. The first one is at the network level, the network that operates faster payments, simply because you will have multiple accounts sending money to a single account, many-to-one flows. Many mule accounts would be sending faster multiple payments same day to a single account, and if you leave it at the institution level, they will not be able to monitor the majority of many-to-one flows. Also, sharing of data is important. So at the network level, we need to build a large negative database, whether it's account-level data or device-level information. We need to capture all that. I mean, networks today, whether you look at a card network, they're already doing that. So we need to replicate some form of network-level negative database system so that if you as a bank, you see a transaction going through, you can ping that data and ensure that there's no fraud associated with the account, with the device, et cetera, before you allow the transaction to go through. So at the first level, you need network-level security. The second level is at the institution, whether it's the participant-level security. There, you need to prevent first-party fraud and third-party fraud. Now, if you allow B2B, merchant, consumer-to-merchant type payment, it's not only identity theft at the consumer level and account takeover at the consumer level, you also have to worry about merchant-related fraud, bust-outs, merchant bust-outs, getting the money, not sending in the delivery. How are you going to deal with all those disputes that come through? Because payments are guaranteed, merchants are going to take the money, and many bad merchants are going to take the money and run, or many bad entities are going to take the money and run. So how are you going to deal with all those issues? So first step is network level, you need to have real-time, millisecond response time fraud scoring capability that would tell the appropriate institution, for the originating institution, potential issues with either the originating side and the receiving side, potential issues. Second, at the participant level, you need to figure out, you could have 2 different types of models. One, a transactional model where anybody can go in and do a transaction, or a pre-authorized model where I, as a bank, have pre-authorized my consumers. It could be a subset of consumers. So if I'm pre-authorizing a subset of consumers, I need to be very sure whom I'm pre-authorizing, provide them the necessary security information so that they can come online and transact. That could be password, PIN, whatever it is. And then the question is, how do you disseminate that information to the end consumer? If it's by mail, obviously there's going to be mail theft. All those issues have to be taken care of. And even there, you need to deploy a detection mechanism that's capable of real-time interdiction. So this is at the detection level.
Okay.
One more point before I pass it on to you. At the response level. So today, alerts are generated when fraud happens. People have time to investigate and come back because many of the shops operate one behind. So one transaction, they see high risk score. Before the next transaction happens, they can come back and stop it. And of course, settlement's not immediate, so they have time. The response to investigate and come back with an answer also shortens. The response time shortens. So we need to have capabilities developed to be able to respond fairly quickly.
Okay. What other risks are we seeing, Brian, Tushar, challenges with real-time payments?
Well, I mean, certainly the big one everybody talks about is the economic model. So how is this going to not only scale from a technical standpoint, but how is it going to scale from an economics and who's willing to pay for what speed? And I think that's a big challenge. I think the governance, particularly because I subscribe to this notion of a hybrid model where we have multiple players managing the different lanes in that highway at different speeds. I think the governance and the rules are going to be very, very challenging. And I applaud the Fed for what they've done in kind of pulling together the industry. But the next stage, that rule stage, is going to be really, really critical. There's a lot of operational challenges. You can't, have a stand-in that's not real time. You can't, intervene in some manual way for a real-time payment system. So a lot of that has to be worked out. The technical challenges, I agree with the speaker earlier. I think we'll work through a lot of those. But the governance and the operations, that liquidity is going to be a big issue. I think that's going to be a very big challenge. And all the changes that are going to happen to the treasury business for our clients is quite significant.
Yep, I actually sit on the other side of the spectrum. I think once you build a highway, you will figure out the ownership and governance and everything else out, right? So I think once you have a highway, you will figure out how to run it. I think if you look at it from a technology standpoint, as you would all know, I mean, if it's going to be a real-time mission-critical system, there's the basics of reliability, performance, availability, all of that stuff that you have to deal with. It's not easy, it's not trivial, but I guess people have done it. They, you know how to deal with that. But I think especially with respect to the real-time or the faster payment system that we're talking about, I think the Fed has started to publish some of these criteria, and I think they are important foundation for what we should look at in the ecosystem. Ubiquity, for example. I mean, how do you get 5,000, 6,000 banks to go connect to this central ecosystem? And it's not just banks. There want to be thousands and thousands of businesses who would want to be a part of the system. And how do you really make it available? And one of the inspirations I look for is if you look at the development of the internet and the email, I think that provides you a really good parallel. I mean, do we have an internet equivalent network that would provide that kind of ubiquity? Are there intermediaries who are going to provide these type of connectivity? That to me is issue number one. Number two is, even if you get a bunch of networks connected to each other, how do you really establish SLAs that can work across multiple networks and multiple connection points? That's not a straightforward problem to solve, and trying to do that within 2 seconds or 3 seconds across all of these networks, that's not straightforward. The third challenge that comes into picture is, let's say you go to ISO 222 or a complex XML format for messaging. You're going to be dealing with billions and billions of messages. Where is going to be the technology infrastructure to actually process these many XML encoding, decoding, et cetera? If you went the blockchain route, it's the same deal with number of transactions. Where is the processing power to be able to do something like that? The other problem comes with number of banks, number of core banking systems, each having their own different account formats. How do you mediate between all these different account formats? The credit card industry has solved this with 16-digit account numbers. They have the first 6 characters, that's a BIN. That's the other problem around how do you really get an addressing going? So if I want to transfer money from my account to yours, how does the thing in the middle know that this account sits with this particular bank? And if you again go back to the way email and internet has solved for it, they invented something called as DNS, which was basically to solve the addressing issue. What in this ecosystem is going to solve this addressing issue? And how do I really know that this account belongs to this particular bank? And then there are a couple of other issues around, well, we talked about multiple hybrid networks potentially coming and forming a solution. What kind of common standards are they based on? How do they really interoperate with each other, right? And then there are some very unique issues that come in, for example, authentication. Some of the countries have actually built centralized biometric systems, right? Some of the countries have actually built centralized bill payment registries. There's a talk of building centralized account registries. We'll still have to see how the US model evolves, but I think these are all the technology challenges that are absolutely need to be dealt with if you're going to have a national level payments infrastructure.
Good. Okay.
Let me add to what Brian said
Quickly.
earlier. Credit risk sounds like the presidential debate.
I'm going to get the buzzer out in a minute. So,
So credit risk, liquidity risk, and settlement risk. Clearly, settlement risk is decreased if you have multiple same-day settlement, but credit risk and liquidity risk are important things to consider. So if you look at the UK model, right, what they've done is they've put a transaction cap on transactions to ensure that there's no liquidity issues. Number two, they've also defined for the issuing, for any institution, what's called a net sender cap. Basically what that is that your net debit position should be capped so that you don't have an enormous net debit position and then potentially cause disruption to the system. Then, in addition to that, they've also created what's called the liquidity liability agreement. What that means is every bank has to put collateral to say that if in the event, for whatever reason, I can't meet my obligation, here's my money up front. But even then, there are issues, because what if your net debit position is higher than what you put down as collateral? All those things have to be worked out.
Okay.
So these are important issues to consider.
okay.
Chris, just one quick point to make. I think the perspective on these challenges is, for one, these are challenges in the ecosystem. But I think if I look at it from your perspective as market players, I would see this as opportunities for you to come forward with solutions to the national ecosystem for solving some of these challenges. I think that's really the way I would look at it from your perspective.
Okay. So our next polling question, and again, for those who came in late, if you register your phone by texting Deloitte BAI to the number 22333, you'll be able to participate. So how would you characterize your organization's awareness about faster payments? Limited awareness, some awareness, moderate, where you're having discussions taking place, full awareness, you have plans in place? Give you all a minute to do that. Interesting, some moderate awareness and full awareness. That'd be very interesting.
Maybe it's because there's been 4 sessions on this.
I know, you're very aware now. And you're going to be more aware after we're done here. So,
Mind you guys, we're talking about your organizations, not about you individuals who are in this.
so that's great. So that leads us to our next question about some of the interesting use cases we're starting to see emerge. Brian, do you want to talk about that?
Yeah, so this is the fun part of my job, is I get to go around to a lot of the merchants and suppliers and talk to them about how they might use the faster payment system. And as Tushar was alluded to earlier, we've cataloged them along different time sensitivities, what kinds of things drive, what kind of services and products are out there that are very time sensitive, where the definitive payment will make a difference. There's a lot of them. I think the exciting thing is that in these use cases and new products and services, a lot of them drive new revenue, and that's a pretty exciting and eye-opening thing for us. So one of the ones that I really love is micro insurance policies. So this is the notion that you can actually get a policy immediately and have that policy paid for. And there are some products that have been out there a while. In fact, it's funny, I was talking to some people earlier today. When I was a kid, you'd get on an airplane, and just as you're getting on, I remember my parents would sometimes fill out a little postcard and put it in an envelope, and you could buy right there when you're boarding the plane a little insurance policy for the flight. And those are gone. The notion is that a lot of those things will come back, whether you're going scuba diving for an hour, or if you're getting on an airplane, or if you're having a wedding, you can insure all those things instantly. It lends itself very well to instant payment, because obviously by the time you land, the value of that policy has gone to 0 if you safely landed. And so the insurance companies have a lot of really creative, interesting ideas on products that they'd like to bring to the market based upon that kind of a thing. Queue jumping is another really interesting one. So we have several clients, including theme parks, that believe that with a real-time payment, They can do things like queue jumping, where consumers could bring a QR code. I think about going to the baseball game and bringing my, somebody's at bat, I don't want to miss too much of the game. I can go right up to the stand, pick up my beer, scan it and go back. But a lot of those merchants don't want to do that if they have to deal with the kind of issues that a non-real-time environment has with disputes and chargebacks and things that they think are going to be much, much lower, and they don't have to reserve for any of that if they're doing it in that kind of a real-time environment. So some really creative things out there. I think it's important that everybody know that there are a lot of ideas, a lot of things coming from the merchant side. Unfortunately, there aren't enough merchants participating in discussions like this, I think, with the industry. So hopefully we can help bring some of those ideas to the table as well.
Okay. Yeah, the only other thing I would add is I think what the faster payments ecosystem is going to enable is not just the element of fast. I think the ecosystem in the US in particular has not really evolved significantly. So I think it's about adding more information to the messages that you have. For example, ISO 8583 is what we're basing ourselves on, and you want to add more stuff to it, you can't. And I think being able to add more information will just enable a lot more different types of use cases. So for example, I could be at a healthcare provider, and I want a lending solution, and I want something integrated into my credit card payment, which is also going to put lending into it. But that's something where you need more information that goes along with the payment. And we don't have message structures that enable that today. And that, I think those start to get, it's not as much about fast, it's about having new messages, new ecosystems that will actually interoperate. And that starts to enable a lot more different types of use cases as well.
All right. I think we're going to go to our next poll question. So for those who were in the last session on faster payments, you might have heard a little bit about this, but when do you think faster payment solutions will be in the marketplace in the US? Text A for under 18 months, B 18 to 24, C 24 to 36, and D never. I'm waiting to see if there's a never.
It's like a horse race.
Pretty mixed views. There's a never.
There you go.
That was Bala in the back, or Sean probably.
Those are the believers in the blockchain.
Interesting. I think some of what we see with our clients pretty much falls in these categories. There are some that are thinking they're going to be marketplace solutions very soon. Others say it'll take a little bit to evolve. And so this is very much a microcosm of, I think, what we've been seeing in the marketplace. I don't know if you have comments on that.
But the interesting thing is that the readiness, so the majority of people believe that it's coming in 18, 24 months, but majority of our clients are not ready. They haven't even started doing any of they're concerned about the loss of float, they're concerned about the technical issues, but they haven't started really doing any serious preparation. And if your IT cycle is 12 months, 18 months, now's kind of the time.
So that leads us right to our next question, right? What should we be doing to prepare?
So, certainly, I think assessing the financial implications is one of the first things that I would look at. I think that one of the things we recommend to our clients in these little workshops that we do is really start to go through those use cases with your customers. So what is your set of customers looking for? Because again, getting back to the economic model, that's going to be critical to understand where you're going to play in the ecosystem. Of course, all the operational implications as well as the risks. You probably want to talk about the technical readiness.
Absolutely, and I think to pick on Brian's point, he talked about the IT cycles of 18 months. The real issue, as you said, is we still haven't figured out the use cases and how this is going to get productized. So the IT guys will get started after that, Brian. But I think, the reality is, if you go real time, you all know a lot of the infrastructure today at financial institutions and at other corporations is batch-based. And a batch to real-time conversion is not a change to the existing system, it's a different kind of system. And I think that's a fundamental shift if you are any of these market players who hasn't yet built a real-time, quote-unquote, a payments hub type of a solution yet. That's kind of one part of it. And if you really look at the vendor landscape now, I think there are solutions that have been tried and tested in other geographies. They are coming to the US with their successes elsewhere in the world. And that's one thing you start to look at. Hey, listen, can my legacy systems really take me there? If not, then are there solutions or vendors that I should be evaluating and bringing them on? One of the things we did, I think, a couple of years ago was did a little bit of a poll around the financial institutions and asked them, how many payment systems do you have internally? And I think the average there was about 4 or 5. And that's one of the challenges. I mean, you are dealing with a lot of redundancy and operational inefficiency within the financial institutions. And for you to go real time on this clunky infrastructure is not going to be easy or straightforward. So I think a lot of it is about what do you do to prepare in terms of, can I really rationalize my capabilities that I have and get ready for real time.
Okay.
So I think it's going to be a lot about, there's a lot that you can do to prepare, even before you start to put on some of these new requirements and new use cases on these systems.
Chris, there's two things I would add. I think one is I've been really surprised at how few organizations have really looked at what the Federal Reserve has come up with so far. So I think really understanding the 36 criteria and starting to dig into those is really important. The other thing is there's a lot of really good lessons to be learned around what's happened with those 14 that have gone live, and even some that are working on some challenges in the 25 that haven't gone live. One, I think disappointment has been in the use of the underbanked in these systems, and it has been much, much lower than was hoped. Okay. So we expect that that'll change, but those lessons are pretty important here in the U.S. as well.
So from a fraud operations standpoint, it's important to understand, to assess where you are in terms of your maturity model. Banks are on either end of the spectrum. There are banks that have real-time capabilities today, real-time interdiction, and very advanced fraud prevention capabilities. And there are banks that are not. And if they want to participate in the faster payments network, they need to beef up their fraud operations capability and detection capability. In the UK, there were banks, or at least one anecdotal evidence of a bank that joined and had a lot of fraud and had to back out of it. So it's important that you assess your maturity level in terms of detection, investigation, and capabilities before you get involved or participate in the faster payments network.
Great.
Chris, one more comment real quick. One of the things that I do as I work with banks very closely is to look at their core banking infrastructure. And for a number of years, you all know, we've been waiting in the US for the quote-unquote core banking renaissance to happen. I mean, it's already happened in the rest of the world, but we haven't embraced that as much in the US. I think this particular event is going to have significant bearing on even the core banking renaissance. And the real question out there is, does that really tip on the other side and make the banks actually transform their core banking systems? And that's probably another thing to look at.
Excellent. So we have a couple of minutes for some questions. Any questions from the floor?
Yes, do you see any implications to the distribution of credit, either for commercial institutions or consumers, that this new payment system would kind of result in?
Well, that's a great question. I think it's one that's pretty heavily debated in the Federal Reserve's task force. I don't think we know exactly where that's going to land yet. I mean, I personally, my own perspective, this isn't a Deloitte perspective, is that we'll continue to see sort of the credit rails as we have them today work alongside, but I think they'll be heavily cannibalized. So I don't know that we're going to see that credit move into the new system the way it exists today, personally, but I think it's still very, very early to determine how that's going to play out.
Any other questions? Well, I think we're right up at the end of the time, so thanks, panelists. Great work. Thanks very much.